Once depreciation is calculated at the end of the accounting period, the amount gotten as depreciation for the period is credited to the provision for depreciation account and debited to the statement of profit or loss account extract. The depreciation under reducing balancing method for year 1, 2018 is $2,500. This amount will be credited to the provision for depreciation account and debited to the statement of profit or loss account extract. As you can see, was given or transferred to statement of profit or loss account. And you can see the statement of profit or loss account is receiving from provision for depreciation $2,500 as depreciation. What this shows is that in 2018, the amount that is going to be deducted from the gross profit made will be $2,500 as depreciation. This amount is written off as expenses but saved in the company's account as it does not involve outflow of cash. For the statement of profit or loss account, the transaction is closed. That is why it's called an extract, because it is just showing us how this transaction will appear in the statement of profit or loss account for 2018 in the business of Victory Enterprises. However, in the provision for depreciation account, since this account will involve accumulation of depreciation, this account will be balanced for 2018 December 31st. So we establish a balance CD. Now to balance this account, balance carried on of 2005 as at December 31st, 2018. This amount makes two sides to be equal because that is a balancing figure. Then we bring it down here and close, and also bring this figure here in the same line, the normal way we balance. Finally, the balance CD is on the debit side, so we bring it to the credit side as $2,500, and it now becomes the balance brought down for January 1st, 2019. So we have the balance brought down 2005 for January 1st, 2019. That is the next year. Now the balancing has been completed for the first year, and the total depreciation accumulated in the first year is 2005. So before we begin the next year's transaction, which is 2019, we must bring down this balance, and that is why it's called accumulated depreciation account. Now the balance brought down is 2005. The next thing we take into consideration is the depreciation for 2019. If you go to our computation, in 2019, under reducing balancing method, the total depreciation for 2019 is $1,875. So in the new year, 2019, we transfer it to the statement of profit or loss account. We have the balance brought down of 2,500 from the first year, that is the previous year. And now we add to it the depreciation for the current year, which is 2019, which is 1,875. And that amount will be sent to the profit or loss account. So in 2019, by December 31st, when the depreciation for 2019 has been computed, it will be transferred from the provision for depreciation account to statement of profit or loss account. And the amount is 1,875. Of course, the statement of profit or loss account extract will be debited with the same amount, 1,875, from provision for depreciation. DEP means depreciation, and this occurred in 2019, December 31st. Now if you add 2,500 depreciation of the previous year brought down and 1,875 depreciation of the current year 2019, the two will give us 4,375. So in year 2, 2019, the two amounts from 2018 and 2019 is now accumulated to give us 4,375. And that is why this account is called accumulated depreciation account. So to close this year, 2019, our balance carried down will now be 4,375. We have balance carried down as 4,375, making the two sides to be equal. That is the same figure that is closed here. Now, that becomes the balance carried down for December 31st, 2019. And we'll bring it down and close in the same line with this, our normal way of balancing. Then finally, we bring down the balance carried down of 4,375 as balance brought down for January 1st. So the balance carried down of 4,375 is taken to 2020 and becomes the balance brought down, that is opening balance for 2020, that is 4,375. As at January 1st, 2020, the balance brought down, opening balance is 4,375. This is the amount that has been accumulated from 2018 to 2019 and now brought down or brought forward to 2020. Then our next operation will be to find out the depreciation for 2020 as at December 31st and credit it in the provision for depreciation account, that is here, and now debit it to the statement of profit or loss account. The depreciation for 2020 is 1,406. And we're not going to credit it here as a transfer to the statement of profit or loss account, and the statement of profit or loss account will be debited. That should be as at 31st December 2020 and as at 31st December 2020. Now we credit the provision for depreciation account with $1,406 transferred to the statement of profit or loss account as at December 31st, 2020, while the statement of profit or loss account extract is debited as at December 31st, 2020 from the amount received from provision for depreciation account. That is $1,406, the same amount as this. PROV is abbreviation for provision, while DEP is abbreviation for depreciation. Now you can see in 2020, under the provision for depreciation account, the depreciation is now accumulated 4,375 from the previous 2 years plus 1,406 for the current year, now gives us 5,781. If you watch, you will observe that as depreciation is increasing, the current one is being added to it and the figure continues to increase. That means what they are telling us is that as at 2020, the total amount that has been saved as depreciation from the motor vehicle is $5,781. So what we do now, we balance the 2020 transaction by establishing a balance carried down at the other side of the account. And that should be the same figure, 5,781, so that the two sides can become equal. And that should be at December 31st, 2020. So we establish the balance carried down 5,781 as at December 31st, 2020. And this amount is brought down and closed here in the same line with this. This plus this gives this. Finally, the balance carried down of 5,781, which is a closing balance for December 31st, 2020, is now brought forward or brought down to 2021, January 1st, as balance brought down, that is opening balance for 2021 as 5,781, showing that the total depreciation accumulated till date is 5,781. Let us look at the depreciation for 2021. In 2021, the depreciation computed under the reducing balancing method is 1,055. Therefore, as at December 31st, it is this amount that will be transferred to the statement of profit or or loss account, that is 1,055, while the statement of profit or loss account will be debited as at the end of the period 31st December 2021. So if we add 5,781 plus the current year's depreciation 1,055 gives us $6,836. This is now closed, and this same amount is transferred as balance carried down to make the two sides to be equal. That is closing balance for 2021 December 31st. Of course, we bring it down and close in the same line with this. Then the balance carried down of 6,836 is finally, then the balance carried down of 6,836, the balance carried down of 6,836 from December 31st, 2021 is now brought forward or brought down to January 1st, 2022 as 6,836. Of course, we were not told to compute anything with respect to 2022. But in accounting, once a balance carried down is established, it is appropriate that a balance brought down is also established for the following accounting period. Continuity concept. Now let us look at the statement of profit. Let us look at statement of financial position extract. That is how these transactions will appear in the statement of financial position. In the preparation of the statement of financial position extract, we take into consideration the cost of the asset less accumulated depreciation. Of course, in the statement of financial position, assets are shown at cost less accumulated depreciation. Let's see how these transactions will affect the statement of financial position. So for the statement of financial position extract, we have cost, accumulated depreciation, carrying amount. ACC is abbreviation for accumulated, while DEP is abbreviation for depreciation. Now we have for 2018 December 31st, of course we know that the motor vehicle, the original cost was 10,000, and total depreciation for 2018 December 31st is 2,500. As you can see, being transferred here to the statement of profit or loss account. Now we have carrying amount, which the old name is net book value, is now $7,500. That is 10,000 minus 2,005. What this implies is that at the end of 2018, the value of the motor vehicle has depreciated, and 2005 has been calculated and saved in the company's account to make up for the reduction in the value of motor vehicle. Now let's see what happens in 2019 December 31st. As at December 31st, 2019, the motor vehicle will also be stated at cost, 10,000, then less accumulated depreciation. Of course, if you go to year 2, the total amount accumulated for depreciation, 2,500 brought down. In second year, it was 1,875. Addition of $2,500 plus $1,875 gives $4,375. It is this amount that represents total depreciation for year 1 and year 2. And that is the accumulated depreciation. This is the amount that will be deducted in the second year. And when you have $10,000 cost, less accumulated depreciation of $4,375, what you have as a carrying amount is $5,625. Of course, the carrying amount is the value of the asset less accumulated depreciation. Now let's see what happens in 2020. Therefore, for December 31st, 2020, The motor vehicle, the cost is $10,000. Then accumulated depreciation is 5,781. We have 10,000 minus 5,781, which gives us 4,219. Of course, this bracket indicates deduction. How do we get this accumulated depreciation for the third year, 2020? If you go to our provision for depreciation account in 2020, you discover that the total depreciation accumulated is 5,781. And it is this 5,781 that was used here as accumulated depreciation. So 10,000 minus 5,781 gives us a carrying amount of 4,219 for 2020 December 31st. Finally, let us look at what happened in 2021. For 2021 December 31st, the motor vehicle is still stated at cost of $10,000. Then accumulated depreciation is 6,836. We have 10,000 cost of asset less accumulated depreciation, 6,836. Then the carrying amount for the last year, which represents the scrap value, is $3,164. Of course, this $6,836 is gotten from the depreciation for the final year 2021. That is 5,781 brought down as balance for 3-year depreciation, and the depreciation for the current year, that is 2021. When you add 5,781 plus 1,055, it gives you 6,836, and that represents accumulated depreciation for 2021. And it is this amount that have been used here to get the amount that will be deducted from the motor vehicle's cost as at December 31st, 2021. The following standards supports the issue of depreciation. IAS 16 on property, plant and equipment, IAS 23 on borrowing costs, IAS 36 on impairment of assets. IAS means International Accounting Standards. We are going to look at this later. IFRS supports the straight line method, reducing balancing method, and the production unit method. It should be noted that subject to the provision of the law, SAS, that is Statement of Accounting Standard number 9, that depreciation is charged absolutely without being prorated in the first year that the asset is put into use. What this means is that if an accounting year of a business starts from 1st January to 31st December of a particular year, and a non-current asset is purchased in November of the same year, a full year depreciation of 12 months will be charged in that 1 month that the asset is put to use. This, however, can be altered in an examination condition. Also, depreciation is not charged in the year that an asset is sold. This is also subject to alteration in an exam condition. What we mean is that what your examiner states take precedence in an exam. Don't forget to debit the statement of profit or loss account extract with provision for depreciation of $1,055 on December 31st, 2021. This was transferred from the provision for depreciation account as at the same date, 31st December 2021, to statement of profit and loss account 1,055. Let's take down this assignment on depreciation. We have the sum of the year digits method, we have the reducing balancing method, and we have the fixed installment method. For the sum of the year digit method, the years are 2018, we have $2,734. 2019, we have $2,051. 2020, we have $1,367. For 2021, we have $684. These are the depreciation for the years. Then for reducing balancing method, the years 2018, we have 2,500 as depreciation calculated at the end of the accounting year. For 2019, we have 1,875. For 2020, we have 1,406. For 2021, we have 1,055. Then for fixed installment method, we have the years. For 2018, we have $1,709. Of course, in fixed installment method, it is the same amount that will be used for year 2, year 3, and year 4. Then the equation reads, using the depreciation figure for each year, for each method, show the following accounts. 1. Asset account. 2. Provision for depreciation account. 3. Statement of profit or loss account extract. 4. Statement of financial position extract. In situations where an organization is into manufacturing of goods